The next economic shock has already started. Most people don't realize it yet. Even if things look calm on the surface, the financial impact is already in motion and will soon affect everyday life. Global trigger. A major geopolitical escalation in the Middle East has created shockwaves in global markets. Military conflict and rising tensions have disrupted stability and triggered uncertainty across global economies. Oil route shock. A critical development centers around the Strait of Hormuz, one of the most important oil transport routes in the world. Any disruption here immediately affects global oil supply and pricing. Oil price explosion. Oil prices reacted sharply, rising from around $60 per barrel to over $100 in a short time. This sudden spike created one of the fastest energy price increases in decades. Delayed economic impact. Even when tensions ease temporarily, economic damage does not stop immediately. Markets adjust slowly, meaning the real-world effects continue long after headlines move on. Cost of living pressure. Begins oil affects almost every part of the economy. When oil becomes expensive, transportation, production, agriculture, and logistics all become more costly. Everyday prices rise. This leads to higher prices for food, electricity, fuel, and consumer goods. The effect is gradual, but it directly increases monthly household expenses over time. Financial caution. Needed during this type of instability, large financial decisions become riskier. Long-term commitments, debt, and major purchases may become harder to manage if prices continue rising. Job market risk. As costs rise, businesses face pressure from both sides, higher expenses and reduced consumer spending. This combination often leads to hiring freezes and layoffs. Business slowdown effect. Companies typically react by cutting overtime, reducing hiring, and controlling costs. If conditions continue, job losses can accelerate across multiple industries. Limited government tools. Governments now face a difficult situation. Interest rates remain high due to inflation, and reducing them could worsen price increases. Printing money is also risky due to high national debt. Economic policy trap. This creates a limited set of options. Every possible solution risks creating another problem, making economic stabilization more difficult than in previous crises. Stagflation risk. The combination of rising prices and slowing economic growth creates the risk of stagflation. In this environment, inflation remains high while job opportunities and growth weaken. Currency and global shift. The US dollar remains dominant in global trade, but rising debt and uncertainty are pushing countries to diversify. Gold reserves are increasing while reliance on US debt instruments is slowly declining. Unequal impact and final reality. Economic crises never affect everyone equally. Lower-income households spend more of their income on essentials like food and energy, making them more vulnerable to price increases. Wealthier groups tend to recover faster, while others feel long-term pressure. In this environment, relying on a single income or ignoring financial risk becomes dangerous. Building skills, diversifying income, and staying financially aware becomes essential. Follow Finance Vault these tips, and you can avoid the pitfalls that trap most investors. Remember, patience, research, and discipline are your best allies in investing.